All right, so we're diving into trading strategies today. We're
Okay.
going to be looking at this YouTube video, and
That's good.
it's called las four mejores estrategias de trading 2024. Top 4 estrategias de trading.
All right.
It's from the channel Riqueza Vital,
Hmm.
and they're promising to show us how to make $500 a day,
Wow.
even if you're a beginner.
That's a pretty bold claim.
Yeah, I mean, who wouldn't
Mhm.
be interested in that?
Right.
But
Brilliant.
realistically, we should probably break down some of the basics.
Absolutely. I think that's really important.
Yeah.
A strong foundation is key,
Yeah,
especially for beginners.
for sure.
The video does a good job of covering those fundamentals,
Right.
like market dynamics,
Mm.
risk management, trading psychology, all that good stuff.
So let's start with understanding different markets.
All right.
The video mentions stocks, currencies, futures. I
Yeah.
mean, it can get pretty overwhelming.
It definitely can. Each market has its own quirks and nuances.
Yeah.
You can't just apply the same strategies across the board.
So, for example, with stocks,
Right.
what are some of the things that drive those?
Well, company performance, obviously.
Okay.
Investor sentiment plays a huge role as well.
Mhm.
And then you've got currencies, which are influenced by global economic trends,
Oh, yeah.
political events,
Oh, right.
things like that.
Those can have a big impact.
Absolutely. A surprise interest rate hike or some geopolitical event
Mm-hmm.
can really shake things up.
You gotta stay informed.
You definitely do. The video stresses the importance of keeping up with economic news.
Yeah, it's almost like you're trying to predict the weather.
That's a great way to put it,
But instead of looking at clouds,
right?
you're analyzing like economic indicators and news headlines.
Exactly. And that's where technical and fundamental analysis come in.
Okay, now hold on a second.
Yeah.
I always hear those terms thrown around,
I know they can be a bit confusing.
but I'm not always sure I really understand the difference. Can you break it down for us?
Sure.
For me and the listeners?
So technical analysis is all about charts and patterns.
Okay.
You're looking for historical trends to try to predict future price movements.
Right.
It's like looking for footprints in the sand to see where someone might be heading.
I like that analogy.
Yeah. And then you have fundamental analysis,
Mm-hmm.
which digs deeper into the underlying factors that drive those prices.
Okay.
Things like a company's financial health,
Mm.
industry trends, economic indicators.
So technical analysis is more about the what,
Exactly.
and fundamental analysis is more about the why.
You got it.
Okay, that makes sense.
The video recommends using both together.
Oh, really?
Yeah, you get a more holistic view of the market that way.
Like using a map and a compass.
Exactly. You need both to navigate effectively.
Okay, now let's talk about risk management.
All right.
This is a big one.
It is. It's something that a lot of people, especially beginners, get nervous about.
Totally. I know I was pretty intimidated by it when I first started.
It's natural to be concerned about losing money, but the video makes a great point about risk management.
What's that?
It's not just about avoiding losses.
Oh, okay.
It's about protecting your capital
Hmm.
and making sure that you can stay in the game for the long run.
So it's about sustainability,
Exactly.
not just trying to win big on every trade.
Right. And the video highlights several key principles.
Okay, like what?
Well, the 1-2% rule, for example.
Okay, I've heard of that one.
Have you?
But sometimes these trading rules,
Yeah.
they sound a bit arbitrary.
I know what you mean.
Like, are they really set in stone?
Well, not necessarily,
Okay.
but the principle behind them is important.
Okay, so what's the principle behind the 1-2% rule?
Essentially, it suggests you shouldn't risk more than 1 or 2% of your total trading capital.
On a single trade.
Exactly.
So even if I have a really good feeling,
Yeah.
I shouldn't go all in.
It's not about betting the farm on one hand.
Right.
It's about managing your downside risk.
Makes sense.
Even the best traders have losing trades.
Yeah.
This rule helps ensure that a single bad trade doesn't wipe you out.
Okay. I'm starting to see the wisdom in that.
Good.
It's a long game,
It is.
not a sprint.
Exactly.
Now, what other risk management strategies does the video recommend?
Stop-loss orders.
What are those?
They're automated instructions you set on your trading platform
Okay.
to limit your losses on a trade.
So if the price starts going against me,
Right.
the stop loss kicks in and sells my position
That's right.
before things get really bad.
It's like an insurance policy for your trades.
I like that.
It takes the emotion out of it,
Yeah.
especially when things get volatile.
That's when I tend to make bad decisions.
A lot of people do.
When I get emotional.
It's natural.
Yeah.
So stop-loss orders can be really helpful.
Okay. Any other risk management tips?
Diversification.
Ah, yes. Don't put all your eggs in one basket.
Exactly. Spread your risk across different assets,
Mm-hmm.
markets, even trading strategies.
So if one investment goes south,
Right.
the others can help balance things out.
Exactly.
Okay, now what about the psychological aspects of trading?
Oh, that's a huge part of it.
Yeah, I feel like that's often overlooked.
It is, but it's crucial for success.
Sure.
The video does a good job of addressing it.
What are some of the key takeaways there?
Well, it talks about controlling emotions like greed and fear.
Yeah, this can be tough.
They can lead to bad decisions.
Absolutely, I've been there.
We all have.
Yeah.
The video also emphasizes having a solid trading plan
Okay.
and sticking to it, even when things get crazy.
Yeah, it's easy to get caught up in the moment.
It is, but having a plan helps you stay grounded.
Like a roadmap.
Exactly. It guides you through the ups and downs.
Okay, so we've covered the fundamentals,
We have.
and I think it's important to have a good grasp of these concepts.
Absolutely. It sets the stage for everything else
Right.
before we dive into specific strategies.
Okay, now I'm really curious to hear what the video has to say about those profitable strategies for 2024.
All right, let's get into it. So the
Yeah.
video starts with technical analysis, specifically indicators like moving averages and RSI.
Yeah, I've played around with those a little bit. Sometimes all those lines and squiggles
I know.
kind of confuse me.
Yeah, it can be a lot to take in.
What insights does the video give us?
Well, it explains how moving averages can help you identify trends.
Okay.
For example, a simple moving average
Hmm.
smooths out price fluctuations over a specific period,
Okay.
so you get a clearer picture of the overall direction.
So you're not getting caught up in those daily ups and downs? You're
Yeah.
looking at the bigger picture,
Right.
like zooming out on a map
That's a great analogy.
instead of just focusing on the next turn.
And the video emphasizes that different moving averages
Mm-hmm.
can be used for different purposes.
Okay.
A shorter term one, like a 10-day,
Yeah.
is more sensitive to recent price changes,
Okay.
while a longer term one, like a 50-day,
Mm-hmm.
provides a smoother trend line.
So you might use a shorter one for like short-term trades
Exactly.
and a longer one for longer-term investments.
That's the idea.
Okay.
Now, the video also dives into RSI.
Relative Strength Index.
Right.
That one I'm a little fuzzier on.
So RSI measures the magnitude of recent price changes
Okay.
to see if an asset is overbought or oversold.
So it helps you gauge the momentum?
Exactly.
Okay.
A high RSI value, usually above 70,
Mm-hmm.
suggests the asset might be overbought
Oh, okay.
and due for a pullback.
And a low RSI.
Usually below 30
Okay.
could indicate it's oversold.
So maybe it's a good time to buy.
Potentially?
It's like a thermometer for the market,
I like that.
telling you if things are getting too hot or too cold.
And again, the video stresses combining RSI with other indicators,
Okay.
like moving averages.
So you're not just relying on one signal.
Right. It's
Huh.
about getting a confluence of signals.
Makes sense.
Now, the video also recommends practicing with demo accounts,
Oh, yeah. Demo accounts. Those are great.
especially for beginners.
Yeah, you can test out different strategies.
Right.
Without risking real money.
It's like a flight simulator for traders.
Exactly.
You can get a feel for the platform,
Mhm.
the emotional ups and downs.
Yeah, without losing your shirt.
And speaking of which,
Okay.
the video also emphasizes fundamental analysis.
Yeah, we talked about that earlier.
Right. It's about understanding the intrinsic value of an asset,
Okay.
whether it's a stock, a currency, a commodity.
So you're going beyond the charts.
You can-
Exactly. You're looking at the factors that drive those prices long term.
Right. And the video suggests some key areas to focus on.
Like what?
For stocks, you might look at a company's financial statements,
Okay.
their income statement, balance sheet, cash flow statement.
So you're getting under the hood,
You are.
understanding the engine
Exactly.
that drives the company's performance.
And you also want to consider industry trends.
Okay.
The overall economic climate.
Right?
Is the company in a growing industry?
Mm-hmm.
Are there any macroeconomic factors that could impact their business?
Like interest rates or inflation.
Exactly.
Well, you're connecting the micro and the macro.
You got it.
Seeing how the company fits into the bigger picture.
And this is where it gets interesting.
Okay.
The video talks about algorithmic trading,
Algorithmic trading, yeah.
which uses computer programs
Right.
to automate trading decisions
Okay.
and executions.
That always seemed like a Wall Street thing.
I know.
Like something only super sophisticated traders could do.
Well, it's definitely becoming more accessible.
Oh, really?
You don't need to be a coding genius.
Okay, good.
There are platforms and software
Mm-hmm.
that let you set up automated trading rules.
So I could tell my computer, like, buy this stock if the price drops below this level,
Exactly.
sell this currency if the RSI goes above 70,
That's the idea.
and the computer just does it for me.
Automatically.
So it takes the emotion out of trading.
That's one of the big things.
Because I know I can get emotional
We all can.
and make bad decisions.
It happens.
Yeah.
So having a computer follow the rules
Right.
can be really helpful.
It's like a disciplined trading robot.
Exactly.
But are there any downsides to algorithmic trading?
Well, of course, no strategy is perfect.
Right?
One potential downside is unexpected market events
Okay.
or glitches in the software.
Yeah.
If your algorithm isn't designed to handle those,
Mm-hmm.
it could lead to losses.
So you have to be careful.
You need to backtest your algorithms,
Okay.
make sure they're robust,
Right.
and monitor them regularly.
Because the market's always changing.
Exactly.
So your strategies need to adapt.
Now, the video also mentions scalping and day trading
Scalping and day trading.
as popular short-term strategies.
Those seem pretty intense.
They can be.
Like you got to be really focused
Yeah.
and make quick decisions.
That's the nature of those strategies.
Are they suitable for beginners?
Well, they come with their own challenges.
Really?
Scalping in particular
Mm-hmm.
involves making very quick trades,
Okay.
holding positions for seconds or minutes even.
Wow.
You need a deep understanding of the market,
Yeah.
high level of concentration, ability to react quickly.
Sounds a bit like a video game on expert mode.
It can be.
Yeah.
And day trading,
Mm-hmm.
while not as rapid fire,
Right.
still involves managing multiple trades throughout the day,
Right.
closing them all out before the market closes.
So it's not for the passive trader.
Definitely not.
You got to be actively involved.
And both strategies come with higher risks.
So risk management is crucial.
Absolutely.
Those stop loss orders we talked about,
Right.
those would be essential.
They will be your best friend.
Okay.
And it's important to remember,
Yeah.
even experienced day traders and scalpers
Mhm.
don't win every trade.
So you got to manage your expectations.
Exactly.
And understand that losses are part of the game.
And learn from them.
Okay, so we've explored some different strategies,
We have.
long-term, short-term.
Right.
But what about the tools we actually need to execute these trades?
Well, that brings us to the next section of the video,
Okay.
which focuses on essential trading tools.
All right, let's equip our trading toolbox.
Let's do it.
I'm ready to gear up. What do we need?
Well, the video talks about trading platforms.
Okay.
It mentions some popular ones.
Like what?
MetaTrader 4 and 5,
Okay.
TradingView, Thinkorswim.
So many choices.
I know it could be overwhelming.
How do you know which one's right for you?
Well, the video emphasizes considering your trading style and needs.
So if I'm a day trader,
Right.
I might need something different than a long-term investor.
Exactly. A day trader needs speed,
Yeah.
real-time data,
Okay.
while a long-term investor might prioritize research tools, portfolio tracking capabilities.
Makes sense.
The video also mentions user-friendliness,
Yeah, that's important,
customer support,
right?
educational resources.
It's about finding a platform that you're comfortable with.
Absolutely one that empowers you to make
Right.
informed decisions.
Now, besides the platform itself,
Yeah.
what about charts and indicators?
Those are crucial.
We've talked about some already.
Right. Moving averages, RSI.
But there are so many out there.
There are a ton.
Any others the video highlights?
It mentions the MACD,
Massey D.
moving average, convergence, divergence.
Okay, I've seen that one,
Yeah.
but not sure I fully understand it.
It's a momentum indicator.
Okay.
It helps you spot buy and sell signals.
How does it work?
It measures the relationship between two moving averages.
Okay.
When the MACD line crosses above the signal line,
Yeah.
that can be a bullish signal.
Suggesting an uptrend.
Right.
And if it crosses below,
That could signal a bearish trend.
so it's another tool for gauging momentum.
Exactly.
Okay.
The video also mentions candlestick charts.
Oh, yeah, I like those.
Visually appealing,
They are.
but sometimes I have trouble interpreting the patterns. Well, each candlestick tells a story
Okay.
about the battle between buyers and sellers.
Oh, interesting.
The body of the candlestick
Mm-hmm.
shows the price range between the open and close.
Okay.
A green or white candlestick usually means the price closed higher.
So that's buying pressure. A red or black candlestick.
Means the price closed lower.
Selling pressure.
Exactly.
So you're looking for patterns in these candlesticks.
Right, to try to anticipate future price movements.
Got it.
But again,
Yeah.
combine them with other indicators and fundamental analysis.
Don't rely on just one thing.
Exactly.
Now, what about automation software?
The video touches on that too.
We talked about algorithmic trading, but
Yeah.
this sounds even more hands-off.
In a way, it is.
Okay.
You can set rules to automatically execute trades.
Based on certain criteria,
Right.
so I could basically set my trading strategy on autopilot.
Kind of. But remember, no software is perfect.
Right.
You still need to backtest your strategies,
Okay.
monitor their performance.
Make sure they're working. It's
Exactly.
like a self-driving car.
I like that analogy.
It might be able to handle most situations,
Yeah.
but you still got to be ready to take control.
Now, before we get too carried away,
Yeah.
the video emphasizes planning your trading day.
Structure and discipline.
It's exactly.
I know I can get into trouble if I just jump in without a plan.
It happens to the best of us.
The video suggests setting realistic goals.
Right.
Now they're talking about $500 a day.
I know.
Is that realistic for a beginner?
Well, it depends your starting capital,
Okay.
risk tolerance,
Mm-hmm.
market conditions.
So it's not a guarantee.
Definitely not the...
The video says to start small,
Right.
focus on gradual, consistent growth.
Don't try to get rich quick.
Right.
It also recommends a detailed trading plan,
Okay.
outlining your markets, your strategies, entry and exit rules, risk management.
It's like a roadmap for your trading journey.
Exactly.
And stick to the plan,
Even when things get emotional.
right? Emotions can lead to bad decisions.
They often do.
Okay, finally.
Yep.
The video talks about ongoing evaluation and adjustment.
That's key.
So you're not just setting a plan and forgetting it.
Right. You need to assess your performance,
Okay.
make adjustments as needed.
The video recommends a trading journal.
To track your trades, analyze your wins and losses,
Okay.
identify patterns,
So you can learn from your mistakes.
and your successes.
Wow, we've covered a lot today.
We have from fundamentals to algorithmic trading.
I feel like I have a much better understanding now.
Good. I'm glad.
The key takeaway for me is
Yeah.
trading success takes knowledge, discipline, and a willingness to learn.
Couldn't said it better myself.
It's a journey, not a destination.
Exactly.
So what aspect of trading are you most excited to explore further?
That's a good question.
Is it technical analysis, fundamental research, maybe algorithmic trading?
I think I'm going to dive deeper into fundamental analysis.
Okay.
It's fascinating to me.
Yeah, it's all about understanding the bigger picture.
Right.
Well, that's all the time we have for today.
Yeah.
Thanks for joining us on this deep dive into trading strategies.
It's been a pleasure.
Keep exploring, keep learning, and happy trading, everyone. And